if you were in the White House, how would you be looking at it? Go big, go home, go small, go bipartisan? What's the best strategy?
Go big, go fast, go in two parts like they're doing. So what you're seeing the Biden administration say right now, and the economic team say, is we don't have to do every single thing for our 4-year agenda right this second. The most urgent thing is to get relief, get the state and local relief that has not happened, get people the extra $1,400 so they have $2,000, get rental relief. Rental relief is critical because they know a lot of people are going to reach a cliff, and that's going to hurt the renters. It's going to hurt the landlords, but it's going to be brutal for the families renting. So what they're going to say is, let's get this major relief out so that from a humanitarian purpose, but also from an economic purpose. Let's limit the suffering. Let's limit the downward cycles. And once we've done this, and I think it will be a big number in the $1.5 to $2 trillion measure. Once we've done this and got this out quickly, then we will come back and start working on the Build Back Better agenda, the infrastructure, the technology, the manufacturing, the care economy, the care jobs. Those things are critical, but they're complex. They're going to take a little bit more time. Let's not wait. March 14th is when unemployment insurance runs out for millions. People are, need more than the $25 billion that was given for rental relief. So I think this is a smart strategy. And I think they'll say, we want to go fast. And if we can go bipartisan to go fast, then let's go bipartisan. That would be optimal. But they're not going to give up their ability to use reconciliation and get this done with 50 votes if they have to.
Well, that's what I was going to say. I mean, we could barely get the $900 billion done. So going to $2 trillion feels like a lot. And particularly when you have Senator Joe Manchin, for example, he tweeted the other day, if the next round of stimulus checks goes out, they need to be targeted, et cetera. Does he have to go smaller to get the bipartisanship and members of his own party, quite frankly?
Well, again, I don't know what the exact number is, but I think it's going to be significant. And I think, I think there's ways you could get that check out where you could, perhaps have it a little more targeted, but still get $2,000 total to most people. And I think when you start looking at the details of some of these other things, the vaccine distribution, well, who's going to think you need less on that? The unemployment insurance, where we just lost 140,000 jobs last month, and we want to prevent long-term unemployment. When you hear that there are, perhaps 10 million families who might be $5,000, $6,000, $7,000 in debt on rent, I think when you look at the specifics of this, you'll move away from just what's the price tag to, do you need these things? And I think from Joe Manchin on, people are going to think that they do need them and that they will prevent a lot of suffering. And most of those things will be targeted to people who need it the most and are going to have the highest propensity to spend, meaning it's going to have the strongest impact on increasing demand. And I think leading to a strong first and second quarter, even at a time where we'll still be pulling out of COVID.
Having worked in two administrations that had their own fair share of drama, can the Senate and the White House and the House, for example, work on something like impeachment and also work on a stimulus package at the same time? Is it literally possible in terms of a focus, in terms of horse trading, in terms of conversations?
Yeah, obviously you can do more than one thing at a time. I mean, in 2009, the Obama administration, and I was there, had to work on saving the auto company, financial rescue, and still pass an $800 billion Recovery Act. So yes, you can do more things. And I'm not an expert, more than anyone on whether they're going to do what Jim Clyburn said and wait 100 days and give time, or I think, and give time to get some of these economic things done. I think what you've seen the president-elect say is basically, we can walk and chew gum at the same time. Let's design this so that you're not making a choice. How Chuck Schumer and them work that out, I don't know, but I'm confident that they can, and I'm confident that there is nothing that is going to keep Joe Biden and his team from getting out the emergency relief to localities, to firefighters, to first responders, to families on unemployment, to people facing eviction. I don't think there's anything that's going to put that on delay.
I wonder, as an economist, how you then look at the debt load. Specifically, I wanted to bring in, you had Joseph Stiglitz, Peter Orszag, as well as the former U.S. Treasury Secretary Robert Rubin, writing a piece talking about how this is the time to reduce exposure to interest rate variation, make it respond more automatically, basically go into the market, borrow as much as you can with these low rates. They won't be there forever, and you have more of an automatic kind of stabilizer. What's the good and bad to that?
I think the most important thing, and listen, Joe Stiglitz and Bob Rubin don't agree on everything, so it's worth listening to them when they do. But I think the most important thing, and as someone who was an advisor during the campaign to Vice President Biden at the time, we went and solicited guidance from everybody, not just the progressive economists, but Janet Yellen, Ben Bernanke, everyone believed that right now, with real interest rates so low, that this was the perfect time for bold emergency, one-time borrowing to get out of this recovery to speed to full employment. So what's interesting is that this is much less of a partisan or ideological issue, because the evidence is just so overwhelming that there probably has never been a better time to go bigger or borrow. You can have a much bigger debate about how much you should do ongoing things that might have a negative impact on the deficit. But when you're talking about getting a few $1 trillion into this economy to speed us back to full employment and measuring that against the impact on debt, when debt service is going to be so low that even with this extra money, debt service as a percentage of the economy is going to be less than we thought. I just don't think there's a strong counter argument to what Biden's going to do on going big and going immediate.
In those conversations, where was the raising tax debate?
Well, I think that what the president-elect believes is that you need to marshal and have a big bang, both relief and jobs package. If you look at his Build Back Better, it was an urgent effort to on infrastructure, on manufacturing, on Made in America, on improving care jobs in the economy for workers, the workers we admire so much now, but it should always admire and pay more and pay with respect. But I think there was also an understanding that as you do ongoing proposals, you want to make sure that if you're doing something that's going to go on for 10 or 20 years, that there is an offset that generally allows us to do that without having a major effect on long-term deficits. And so I think what you'll see is there'll still be proposals to have taxes on the top 1%, and that those will help make sure that when you're doing long-term things like an ongoing childcare proposal, like a permanent unemployment reform, that people will see that that's being done in a way that is both humane, good for the economy, but also is being done in a way that is not leading to ongoing explosions 10, 20 years out beyond what the path is right now.